Hi, well, I'd like to welcome Kenton to our first episode of Scalping the Market. I've been a
Ooh,
good friend. I've been a good friend with Kenton for a few years now. We've traded together down in Texas, and yeah, we've we've gotten to know each other quite well over the last couple of years. So, welcome, Kenton. This is going to be a video for our exclusive members of CTP.
awesome. Thank you for having me, Ted.
Yeah, no, it's going to be good. So we're wanting to talk about scalping today, and it's something that our group doesn't do a whole pile of. I think you've kind of embraced it over the last little bit. So before we go into any charts or what your rules are, like what made you decide to get into scalping?
Matt actually posted a video on the CTP YouTube channel, and I had seen it a few years ago, and it just made sense where he explained we're hodling or holding for over a year, that you'd miss all these awesome waves and opportunity. And I thought, well, how far could you actually zoom in on a chart to make it worthwhile? It's not really worth it if you go down to like the 1 minute candles where things are way too fast. And sometimes the days would take a little bit too long. I was just trying to find a nice middle. And I think it was about 2 years ago when BAT was moving up, I noticed that it was making these waves and they were playable, where you could see it go up really high and you see a giant green candle kind of stalling for a bit. You get the inclination that it's either going to go up slightly more or drop. And sure enough, it will drop just enough to where you could make some low ball orders and they would fill up. And then as it would go up again, do the same thing until you got to where you would say, you know what, the RSI is way too hot. It's going to hit the next level resistance. On the larger time frames, it's probably time to just kind of exit from there. And sometimes Matt would say, oh, all right, I'm pulling out. That's probably as high as it's going to go. And that's be my cue to say, you know what, I can't continue flipping these pancakes for this coin. In that case, it was BAT a few years ago. And that was without leverage. And I did quite well. And I was very surprised. I'm like, shoot, what can I do with leverage? But at the moment, I wasn't sure how to use it. I knew you could get liquidated real quick. So I was kind of skeptical. And then that brought us to the up and down pairs where you couldn't get liquidated. So I thought that was the best thing in the world, better than sliced bread. But with Binance, they tend to change the leverage on you on the up and down pairs as they choose, when they choose, and you don't get to find out how much. And the charts were really off, and you had to look at two charts to find out what one was doing. And I think that was more of a hassle. So then just kind of started leaning more towards the leverage trades little by little and started playing with the leverage. And I'd go up to 50% and let's see what it did with $1,000. And of course you get liquidated. But I didn't mind at first because I needed to learn how to do it properly so like that in the future I could get the hang of it. The idea was to get a pattern or a set system to where you would constantly win. Might not be massive wins, but that was fine because it's not a sprint, it's a marathon. You want to just consistently win over time and keep compounding your wins little by little. And that's what I did these past couple of weeks where my account grew. I had that specific account at $2,500 about 2 weeks ago, and then it got up to 13,000. And I was just blown away. I was like, wow, that's crazy. I was doing trades left and right, and every time I'd get a win, I'd post it. Maybe these past 2 weeks, I had about 3 losers, and it was between $5 to $20. And I just sold them at a loss because I knew the market was going to dip more, and it was just next to nothing in comparison to all the upside. And that was just pretty much a summary of these past 2 weeks where it was going great, and right now it's kind of so-so.
Well, you know what, you said some big things in there. $2,500 to $13,000. That is very, very impressive. So it is a valid way to grow a small account. However, that you also did mention, I have to kind of give a warning to people that are going to be watching this, is you do use leverage, and I think you have to use leverage in your type of trading to make these 1, 2, 3% moves actually make a difference.
What's really interesting there is I chose 20x because it's a unique round number where if you have $100 at 20x, basically five of those dollars you can actually use So let's say you have $100 in your futures account and you do 20x leverage, you can only do up to $5 worth before you get a liquidation number, which doesn't sound like much. But if you do a $5 trade, this is just example, just three short numbers, easy math, and that coin that you chose moves up 5%, in reality, you just won 100%. Versus it just moving 5% and you only get the 5%. Now, you put bigger numbers there and you start getting more. However, it's going to require you to have more backup capital. So initially, I was just kind of playing it small and just trying to be consistent. Just play the long-term game versus the quick home runs. I've had a few good home runs previously with the up pairs. But here, I think it's a long-term game. We need to win versus, hey, let's just beat this bull market that's going to last a couple of months and then wait a couple of more years. I don't know. In it to win it for the next couple of years, I think that's going to be probably the best strategy. So like that, even if it only moves 1% up and down, at 1% using 20x leverage, that's a 20% gain. It naturally moves up and down 1% without any action or pressure. It's just natural fluctuations. So there's always going to be room to pick up some. It's going to be tedious. You got to look at the charts and constantly be on it. But if it's bringing in gains, well, I think it's worth it. If you time permitting, if you're busy, hey, rush your busyness. You have to trade on your time. And that was one big thing Matt and Kurt told me. They're like, you trade when you can. If you're busy, don't do it. You're going to get wrecked. Sure enough, I tried doing it when I was busy. It did not work. Did it on my free time. It worked much better.
So there's some really good advice that you've said there. So obviously we're going to delve more into it, but you definitely sound like you have a plan. There's certain criteria or rules that you have to have going into each of these trades, whether you're scalping or whether you're doing long term. But I think one thing I'm really interested in asking you, because it's often haunted me, and it haunts everybody. It is a mindset, because there's coins where you can scalp and you make really good gains, where if you would have just bought into it and held it for even a week, 2 weeks, you could have made substantial gains as well. So how do you keep your mindset in check, saying, okay, it's okay if I just played it for this day and I missed out on longer term gains that I could have had staying in, like, because you can't have both pieces of that cake. Am I correct in saying that?
Absolutely. But there it comes back to when I go to Vegas and gamble a bit, where the odds were against me. And if you won there, hey, you did great, because they're always against you there. I noticed that no matter what, the house would always win, but they didn't have to win all of it. Anytime you do a scalp, you have to go in with the understanding that once you're in the green, you want to get in and out as quickly as possible, take profit aggressively. You will always leave some on the table. Once you start thinking, well, I'm always going to leave a little bit on the table, hey, that's cool. You get some money, and the house keeps a little bit of money, and they're happy about it. That's the mindset, because you can't always get that table clean 100% and wipe off every single penny off the table. It's just not possible. You'd have to be glued to the computer 24/7. You'd need to stay awake forever, basically, to catch all that, and it's just physically not possible. Or you need an organized team of people glued to computers, and some things happen so quick that by the time you reach to hit a button on your computer or phone, it's gone. The opportunity is lost, or it's moved heavily one way or the other. So to mitigate that and to keep your sanity, you got to think, you know what? I got in this trade. I did 20x. It moved 2%. It's an indecisive point. I'd rather take my 40% profit on whatever it was and use that to roll it into the next one and to the next one. I actually counted this past week. I did about 75 trades as of last night. Then this morning that were over or in the green, anywhere between 10, 20%, all the way to about close to 200 using the 20x leverage. Then this morning, I closed about 10 more in profit, or about 9 more. So we're talking about 85 trades from last week to this week, about 10, 15 days in total, give or take. And all it was is they kept compounding. I was riding the waves. It goes up, sell it, set low ball orders, spaced out, and just ride them back up. Of course, that only works in the uptrend, making sure BTC isn't bullying the market. There's lots of things to consider there. But it's not just all me. I do rely on CryptoTradersPro because I do take input from everybody. I see what other charts are being posted and the traders charts and traders chat. I check all the individual rooms and see what looks like it's uptrending and where could the next move be.
Well, I could definitely say for myself and for the others in the group, you've been an inspiration. You've been posting lots of profits, and I think that really intrigues people. But obviously, you've sat down, you've worked yourself out a plan, you've got yourself a strategy on what you're doing. So I guess before we hit the charts, what's the kind of the time frame that you stay in a trade, and what chart do you use for time? Are you using the hour, the 15-minute, or is it a combination?
It has to be a combination because first you want to see where it's going directionally, weekly and daily. There will give you an indication, okay, it's a decent idea to look into it. There was several good ones that all the admins had posted. And all of them, what I do is I look at the larger time frames. All right, looks good. I see the charting. For example, we had posted one for comp, and I had seen that it had some potential. All right, so then we put some orders in, starting about 1% spaced out because it was slightly going up and it hadn't gone on a big run up. Therefore, it's generally not going to come down very sharply unless BTC ruins a party, as it did kind of. And sure enough, I was able to trade comp about 2, 3, 4 times since he posted. I lost count. And what happens is, so on the larger chart, you see where it's going on the 1 day and the weekly. Okay, so you go down to the 4-hour and you try to spot patterns. Is there something there? Sometimes there is, sometimes there isn't. There's nothing here in the 4-hour. Okay, let's zoom in a bit more to the 1 hour. It looks so, but it's unclear. Once you zoom into the 15-minute, you see these crazy opportunities going on that you don't see on the larger time frames, where things are moving a little bit slower, but they're moving a little bit quicker. So since they're moving quicker, but it's small quantities, you need the leverage. So as you move in down to the smaller time frames, the volatility is actually going up, where there's more natural movement, and of course with the market. So there, all you have to do is know your wedge patterns, and basically any pattern like that you normally use, it be bullish, and you can kind of break. You see it from there. You see them forming. They form a lot like crazy, and you just have to see. All right, can I find my line of support? What kind of wedge is it making, if any? Is it an inverted head and shoulders, or vice versa? Is it going bearish? In some cases, you do see them printing over and over bearish. Because when you look at it zoomed in, it could be bearish on the 15-minute, but if you zoom out to the hourly, it's a 1-hour bear flag. So you have to be kind of in tune to see where it's going. Yeah. If they're going up, you'll see more uptrending patterns throughout all the time frames. And I thought that was strange. I was like, wow, you can kind of, if you see on the smaller ones, it's starting to dip, and you zoom out and it shows the same thing, that it's dipping and it's not a bull flag or something bullish, then yeah, kind of either put in really low ball orders or cut the trade if it's in the profit.
Yep. Yeah.
And
well, that's interesting that you say that. That like a pattern on the daily. If you're working a wedge on the daily, that those wedges will form on the 15-minute, and they'll act pretty close to exactly the same. However, you're going to get a lot more wedges on a 15-minute time frame than you are waiting for a wedge to form on the daily.
Correct. And what's crazy is you see a lot of breakout retest patterns, and that's one of Matt's favorite ones. That was ingrained into my skull, the breakout retest pattern. And that's one of the ones I try to use the most when possible. But then again, the 15-minute isn't very accurate for long term. So that's why it's such a quick in and out. It sometimes only lasts about a day, maybe a couple hours. If I see in a couple of hours it went up using 20x leverage 1%, which equates to 20% or 40% at 2%, then I'd say, you know what? If it's starting to look shaky, I'd rather just take my profit and run. If it goes up, that's fine. I'd rather have one in the hand than two in the bush, me trying to chase them and figure it out. And I'd rather just wait for the next play because there's always another rocket. Kurt always says that, and it's true from now to the end of the time. There's always going to be another rocket. And if you got more capital for that next rocket, you're going to be even more in the green. And the process just keeps continuing. You just keep compounding your wins little by little. It takes long, yeah, but shoot, after this week, I'm convinced we might be onto something. It's not perfect. It's not for everybody. If you practice it long enough with small amounts and work your confidence up, I think it might be something everybody can work on.
Yeah. Well, you know what? That is sound advice. Just like anything, keep working on it. You get comfortable with something, and you can succeed at it. So, yeah, let's jump into the market and let's take a look at a chart and see what you're talking about. Now, you had mentioned that you were in SRM. We had talked about this before the call. So we're going to take a look at that chart. And we'll start with the week. Can you see everything?
Yes, sir.
Perfect. So I'm going to, so you had mentioned before that you take a look at the larger time frame. So we can see that over the last 3-4 weeks, SRM on the weekly has been in an uptrend.
So there, I see the rounded bottom.
Yep.
So that gives me confidence to zoom in a little bit more. Let's see what's going on during the daily.
Okay. So we've established that we're in an uptrend on the weekly. So let's take a look at our daily here. So hopefully you can still see everything okay. There. So we still have that rounded bottom forming. So what other indicators are you looking at?
So right there, sometimes when you look at a chart, you're thinking, heck, that's a lot of wicks. I don't really like that. Where you're trading quick time frames in and out with leverage, that might actually be your best bet using those wicks. Now, you got to be not math ready. I guess you should have some of the math ready for it. For example, at the lowest part, it's about $3, $3.50, give or take. So let's say it's starting from the bottom there, starting to go up.
Yeah.
You got to about what's that, 250?
Yep, we're at 250 here.
You can see where that's a line of support. So from that point onward up, you can see we're kind of double bottom there. And as it begins to move up, probably where I was starting to get in these last 10 days, give or take. And as it's going up, you know that, you know what, that's going to be roughly the support where that's as low as a wick can go. If it goes lower, then you should reconsider the trade. And if it goes lower, it's usually, well, it might be related more to BTC than one of these DeFis as of recent. Things might change in the future, but right now DeFi is hot and everything DeFi related is doing great. Now, all right, so we have a range. Now we're gonna zoom in. Let's see, we're on the daily. Let's take a look at the 4-hour and see what patterns are showing up.
So let me zoom in here a little bit. This is just, this is the 4-hour. So I'm gonna really get this on our screen. There. So I'm going to clear off all. So do you keep your lines of support from what you put on the daily chart? Do you keep those lines of support, or do you kind of start with a clean pattern?
Just, you don't necessarily have to physically have them on the chart there. You'd probably have to write them down or know that, you know what, that's going to be the bottom of my scale. As in my spin orders, that's as low as I'd want to go. anything else would be tragic
Mm.
at that point. You just
So
wanted that.
what
That's
I'm gonna
your
just do here, I just want to go to the daily, and like for me, I'm just going to put, like, we've got lines of support here, right?
Mhm.
Yeah, so we'll just start there, and now I'm going to go back to the 4 hour there. Okay, so now we've got some ranges here that look like what you mentioned. They're following these ranges.
So that's on the 4 hour. On the 4 hour, you can kind of see where the candles are just, they're not showing enough information and they're just too wide to give you an in-depth view. But you can
Mhm.
see that there's some V patterns or U-shaped bottoms.
Yeah.
So let's zoom in into the hourly and
All
it'll
right.
clarify them a bit more because it spaces them out a bit more.
All right. That's, oh,
Now, since you're zooming in, the lines of support get a little bit further away.
yeah. Yeah. So these are like you said, these lines of support, they're more the major ones where as you zoom in, you start getting more micro levels of support.
Correct.
Okay. So yeah, so this is our hourly. There. Now we're
Mhm.
really zoomed in.
All right. So there you can still see all these crazy wicks. Now,
Mhm.
each one of those wicks is a good opportunity to sell the top of that wick and attempt to buy that lowest part of the wick. Now, if you just look at the right-hand side where it gives you the price, you can see that it's only going up a few pennies, up and down,
Yep.
10 to 20, 30 at a time.
Yep.
$5, 5 cents would be 1%, give or take. So any 5 cent move above or slightly below the $5 range is 1% on that chart,
Yep.
which at 20x leverage equates to 20%. So give or take every penny that it moves at $5 and up, it's a percent, and it's moving.
Yeah.
Now, 1 hour is still a bit out. Sometimes you can see some breakout retest patterns. You can find some wedges in
Yeah.
that chart shown towards kind of the back, and then it starts moving up.
So this is
Now,
this is what I like. Sorry for interrupting, but this is my
no
favorite
problem.
place. So
Mhm.
on the hourly, I like it right there. There's a wedge formed right there. So I'm just gonna zoom in, and
Absolutely.
this is
The-
how I play my scalps. I don't do as much as you, but here I really like this pattern, and I know it's gonna consolidate in this area, and then it's gonna move up. So I would have probably got out around here. So what you're saying is I'm up, see, even if I'm conservative, I'm up 10% on this trade at 20x. I've got 200% on that trade in, this would be over a day, but still.
Correct. So there's these small patterns going on where you could make it worthwhile if you got the time available.
Yeah.
And even then, that one would take about a day to play out. And the 1 hour candles are kind of wide. They don't
Yeah.
really print out that much information. But let's zoom into the 15-minute and you can see where the party's really going on.
Oh, I like to party. I
There
like
you
to
go.
party. Okay, we got 15 minutes here, so let me get this
So now
there.
the 15-minute, I think that's about as low as you'd want to go,
Yeah.
unless Bitcoin's doing something crazy and you're just monitoring it. Other than that, I don't think there's anything valuable lower than that, unless you need to find out what's going on in between the 15 minutes. Other than that, I think that's the most zoomed in you'd want to be.
Yeah.
And even there, you can see a lot more opportunity going on.
Okay.
As you zoom in a bit more, you just kind of space them out a bit. You'll notice that there's these
Go
big
like
red
this.
candles.
Go like this.
The other away from each other, kind of zoomed in a bit more.
Okay, so zoom in like this.
Yeah, there you go. So
Okay.
there you can see the colors a bit more, and you can see all these big red and green candles. So the idea here is you can, there's clear definitions of a giant red candle and a giant green candle. If you see a really big green candle, that's probably a good time to start sitting in some buy orders. Let's say that one at the upper left corner that's sitting above $7. You just see these three green candles,
Right
the big
here?
ones. Yeah. So
Okay.
let's say you missed that one. Shoot, it went up. All right, no problem. That in itself is a good indicator that, you know what, anything that's a giant green candle is going to come back down. So there, that's an indicator for me saying that it's going to go down at some point, and since we're in an uptrend, it's going to come back up.
Yep.
So there you could set low ball orders from the very top. Well, not necessarily the very top of the wick, but you'd start at the very bottom of that where the green candle started.
So right down around the $6 area.
So that's just for reference. You could zoom out and you can go lower and lower.
Yeah. Okay.
Well,
that makes sense.
So you basically want at the base of that green candle. That's if it completely retraces that short move in a quick time frame, it's going to come back up because it will hit the next level. Even if it goes down slightly, the next one will catch it and bounce it up. So how that one played out, where the blue arrow is, you can see where it started forming. It was starting going kind of like a bull flag.
Yeah.
And you just follow the pattern or a falling wedge, and you can kind of see where if you follow it long enough, another green candle will chase it right back up.
Yeah.
And it continues. Then once you see a red, once you see a giant green candle and you're up in the green, it's time to sell. It's really hard to find a really, really extended, tall, straight up candle. They're usually about, give or take, the size of the one next to the blue arrow or the one at the end of that pattern.
Okay.
Where they only go so much. You're not going to find unless it's being manipulated, but for the most part, in the 15-minute range, that's about as big as they get, give or take.
Okay. So let's take this. Let's take this example here that we. So you've seen that it pumped, so it's caught your interest. So you're going to follow this pattern down, and you're going to see. Okay, well we've got. It looks like we've got a formation here, where we've got a doji, and it looks like it's. You know, we've possibly got a breakout here. So if you're more aggressive, you would put orders down around this $6.60 area, or you wait for this breakout and you get in and you just wait for that candle to close, and you're up 8% times 20. You're up that's 160% move for you.
That's right.
In 15 minutes.
Give or take. Well, each candle is 15 minutes.
Yeah.
There's about 20 candles. So that's about 4 or 5 hours to do that trade.
Yeah, because you have to monitor this trend that you see developing.
Correct.
I see. So I guess in the morning, how do you, like you had mentioned it before, how do you set yourself a watch list? Because I think that's an important part of scalping, is to know which coins that you want to attack on that day, because you can't look at everything. So you had mentioned that you go into CTP and take a look at some of the charts that are being posted. What other tricks do you have for like picking a coin that looks like you're going to get some volatility to it?
Usually, I also, since I'm on mobile 99% of the time, I use TapTrader a lot, and I have about 40 coins on my watch list. About half of them are DeFi. The other half are the upper legacy coins, including Bitcoin and all the other ones, and any others that have been well performing, and all the ones that are CTP picks. I got them all there. With the TapTrader app, which everybody should have, it's free. You can constantly take a glance at the whole market at once, looking at all the charts, about 20 charts at a time per screen, and then you just kind of have to scroll a bit, but it shows you more or less what they're doing. And if you see, well, you know what, one chart on my TapTrader shows it was really high and it's taking a really big dip. well, might be something to look at. And you start zooming in. And once you get between the hour and 15-minute, give or take, you can kind of see the pattern that's playing out on the little miniature chart that Tab Trader gives you on their tickers. That's kind of where I found that to zoom in far enough to find it. And then from there, they're not big moves, but they don't have to be. Here, having not that big of a move, just enough to where it's about 8%, that's going to do me great.
Yeah.
And then,
sorry for interrupting.
No, continue.
Yeah. So, when you're taking a look at these charts, I mean, are you using any other indicators to help you out with your trade?
Sometimes I look at the volume. You can kind of see where it comes into play, like directly underneath each candle. But that could be misleading because as it pumps, so does the volume. But that can kind of tell you more or less where it's leaning. It's not a heavy indicator I use, but you can kind of see it even on the smaller time frames, the volume, because there has to be volume for it to move up. If not, it won't. Another good indicator to look for is the actual exchange itself. Well, for example, I use Binance. You can check the list of futures coins, and you can rank them in percentage gains or losses in a 24-hour time span. So there you could say, you know what, let's see who had the biggest loss today because they're going to bounce back if we're uptrending. Also in the volume section, there's a button you can click and it'll show you who had the most volume and the least volume. Well, if they have the most volume, they're going to have the most volatility. So I'd look at the one with the most volume for that day and see where it's going. See if there's opportunities down in the 15-minute range.
Awesome. Now, I think another important thing that we need just to touch base on is not every trade is going to go for you. Like there's going to be trades that will break down out of these patterns. How do you manage not wiping out your account? Because if you get a 2% drop on the downside, you've lost 40% of your capital that you've put into that trade.
Correct. It's a double-edged sword. You got to be extra sure on it. You got to make sure it's uptrending, and you have to see where do you cut it, and is it worth holding on to? In some cases, it is because the market's so volatile. At the 15-minute, you might cut it, and then it just jumps right back up. And it's happened to me a few times, and you just have to decide how the market is overall and where is it going. So right now, for example, Bitcoin's all over the place, and that's dragging everything up and down with it. So there, having a zero liquidation number allows you to say, you know what, I could actually sit this one out until it comes back if I wanted to, but you run the risk of being stuck in that trade for way too long. And then there, you're just kind of locked into it, but you don't get liquidated. That's not always the case. At some point, you might add a little bit too much and you have a very low liquidation number. And then that's where it gets sketchy, because if you have several coins, several trades open at once and they have low liquidation and the whole market's moving down, those numbers start to rise. So you got to mitigate how many trades you have at once, depending on how much you have in your account versus how much of that coin you bought. It might sound like a lot, but once you get in it, you're like, oh, that's what he was talking about. That makes more sense. So you just kind of got to get your feet wet into it little by little. But there, the best thing to do is be on it constantly. If Bitcoin's tanking, so was the rest of the market, unfortunately. I wish it wasn't that way, but that's just the way it's been. It's tough. Sometimes you got to sit these out. I've purposely put everything right now, looking at the bigger picture, the bigger scope, zooming out into months of this whole thing. We know Bitcoin's going up. So if Bitcoin goes up, so does the rest of these futures. So on purpose, I was trading small amounts in case I got stuck on something. I could wait it out because I know where the market's going. Best case scenario. It could still pull a 180 on us, but I'm betting that the market's going to go up from now to the end of the year. How high? I don't know, but as long as we can make it to about 50, 60,000, there'll be a lot of trades from here to then, DeFi wise. After that, we're definitely gonna have to take a deeper look and just play them even shorter and quicker. And that's where it comes back to taking profit aggressively. You can look at, you can still kind of see even in the 15-minute mark where there's these small wicks. Those small wicks, that could be about 1%. If it moves up, give or take a year or two, doesn't sound like much if you're holding it, but with 20x leverage, that's a cool 20% trade. And that's the other thing. Sometimes people will, and this happened to me. I tried to do a 20x trade on a signal, and I was trying to wait on the signal. I think it was the last time DOT went up to almost 50, but it got caught short around low 40s. And I was there waiting, and that messed me up because I kind of had it dead set that it was going to go there, and I didn't have a plan to manage risk. So me personally, the way I manage it is I make sure I try to keep it at zero liquidation or slightly above. And as soon as it's in profit, if I'm in liquidation number, cut it as in profit. But once you're in it, sometimes you got to stick with it. Me personally, that's what I'm trying to do. During the summer, that was real tough because the swings were a lot crazier. They go about 20, 30%, multiplied by 20x, that would really wreck an account. But I think I'm going to be ready for next summer to try some other techniques out for those crazy swings. And I think there's still a way to handle the market. It's just figuring out what works best. But right now in this uptrending market, it's been, to me, it's been easy because I've been been at it the whole summer, and now the market's in my favor, and you kind of see the profits already.
Well, during this interview, you've made some really good points. You have to develop your own plan, and each plan is an individual plan, because it's really how you feel. Right? Some people aren't comfortable with this, and some people are going to be. Start with small amounts. Manage a stop loss correctly, because once you wipe out an account, you won't get to practice anymore. So play with, like I said, play with a little bit smaller amounts, and really get a feel for this trade. And I guess the big thing is don't get greedy. If you're in profit, you take your profit.
Exactly. That's where I say I'm happy to leave money on the table because I'm walking away with something versus nothing.
Well,
and I can repeat the process over and over and over and just compound it.
Well, you
just
went
like
from to $2,500 to $13,000 is really compounding an account. So congratulations. That's great to hear. Kent, I'm glad that you were able to take some time and kind of go over your strategy. I'd definitely like to get together with you here in the next month or two, just to maybe go over a few more specific trades and get your mindset on some things.
We're gonna need to do a part 2 of this.
Yeah, that sounds like a plan. So yeah, let's call it a night here. We've been at it for 45 minutes. That's good. I think the next time we get together, we'll go over more specific trades, but I think this is a good start to get into a mindset of a scalper. And again, I appreciate you taking the time to spend with us and to delve out some of your knowledge.
Thank you for having me on, Ted. I appreciate it.
That's awesome. You take care, my friend, and we'll see you in the chat room.
We'll see you on the moon, Ted. That's where we're going.
See you on the moon, buddy.
Yeah.
Bye.
Have a good one, Ted. Bye. Thank you.